Cryptos ended the working week down 9%. Bitcoin also found resistance again at $72,000. Fortunately, over the weekend, their prices have stabilized. However, this begs the question, are we ready to see further downside for Bitcoin, cryptos, and the stock market after last week's job reports came out? We need to cover the new highest weekly closes for the S&P 500 and the NASDAQ, and of course, the crash that happened for cryptocurrencies and what indicator is showing up as a contrarian signal to the latest market action. Plenty in store for you guys today. The stock market is a barometer for the economy, not the other way around. That is something that I've learned over the last 18 years as I continue to build my repertoire of trading and investing, let's call it wisdom. And I hope you're doing the same for yourself, keeping your own journals. What that means is that the stock market tells us what is happening in the economy as a forward-thinking mechanism. When we read the economic data, it is a lagging mechanism. This is something that Gann talked about in his books over 100 years ago. The stock market helps you understand what's going on with the economy, not the other way around. The economy doesn't help you understand what's going on in the stock market. And I hope many of you have seen that over the last couple of years as we continue to follow the bull market from the lows. Remember, there was a lot of information back at these times at the lows that suggested the market must collapse from that point. And of course, it didn't. Think of all the things that have happened over the last 2 years with inflation and interest rate rises and banking collapses and US debt ceilings and all sorts that have come our way. Markets continue to rise. And another thing with that is that it's basically climbing a wall of worry. So that's just a little bit of wisdom, I guess, at the beginning of the video. I wish I had that sort of stuff when I first started out because it's so hard to decipher what's happening in the market, especially when you just keep hearing bad news after bad news. As for the stock markets themselves, new highest weekly close in history for the S&P 500 and also for the NASDAQ, a new highest weekly close. Does this mean we're going to rocket up to new fresh prices? At the end of the day, the swing is your friend and the trend is your friend. You would think it's possible that it could. However, I do bring up what happened last time we got into a new all-time high. Last time new all-time high closes, so just looking at this area on the chart for now, you can see that the S&P did hit a new all-time high weekly close and another one, but it was kind of short-lived before you had a correction. So you see this correction come in, then the market moves away from that point. Is that going to happen again? Obviously, we'll just keep watching the chart. We don't need to know for sure that it must or must not happen. We just need to keep following the trend. And for now, the trend has been our friend for a very long time. The prices have been up, higher lows have been forming, and the market has been conforming to a bull market, which continues up. To the downside, where I would start to get concerned that the bull market may have run out is if we start to break the 4,900 low. There's 4,963 for the S&P minis here. And then I'll be looking to the longer term, that's what the LT is here, the long-term support at 4,800, which was also previous resistance, which was also the previous old all-time high. So as it stands for the S&P 500, it's still looking in relative health here. And even if we were to see some sort of correction, you'd need to see prices come well and truly back under that 4,800 point level to confirm that the trend has changed. And in terms of a percentage, that is over 10% from the current prices. So it's not impossible, but it seems unlikely at this stage, even if there were to be a correction. So we've hit new all-time highest prices for the S&P 500. And the NASDAQ's also hit a new all-time high weekly closing price. And yes, there's many reasons for why this is happening, which if you are new to the channel, make sure you do subscribe. And for the rest of you, hit that like button, pay it forward to the next group who hopefully see the content before it's too late for them. Essentially, we've seen and looked at many reasons why the market's going up and how it should be collapsing with only a few stocks running and leading the charge. But at the end of the day, that's been happening for many, many, many months now. And markets can continue to go up longer than the majority think they should. You know, we're hearing all sorts of reasons why it's overbought and it should correct. At the end of the day, just remain with the trend. That's the easiest. The average true range continues to dump and capitulate while the market remains at these higher prices. Now, I'm not saying that it must remain at these higher prices. We might see a bit of a pullback, and I'll get to those price levels in a moment. But the average true range has happened every single time where you start to see this die out, the market get bored, meaning the buyers and sellers, the traders, they get bored, they leave the market only to find themselves chasing their tail when it gets extreme again. So that was the extreme move into the 70,000s. And then we had the pullback. And again, we're into the 70,000s with the true range, the average true range, so much lower than where it was before. It's nearly back to where it was during the ETF hype in the $40,000 region. So we're starting to get back towards some previous support and resistance on the average true range, which could suggest we could be in stall for a significant move. Up or down, of course, anyone's guess. And yeah, I'll just wait for the jokes in the comment section about that. But let's turn on some of the lines here and have a look. So here are our lines on the chart. We're sitting above 69,000. That dump on Friday closed dead on, or just above the 50% level, which is a relatively good sign. However, it is a short-term move. So if we start to have a look at the longer-term moves, back to this specific low here at 60K, the line comes in at 66K. So our 50% levels at 66. You've got your white line there, roughly about 66.7. And of course, the major 50%, it still sits at 64. So there's a fair bit of price support underneath the market, even if it were to dump. And this is the Bitcoin market, of course. It could still come back, sit at these levels up to around 64K now, and still be in a relatively healthy position. Now, of course, the major 50% comes all the way back to the move down, which sits at 65. So I would be looking at some sort of tests to 64 and then closes back above the major 50% level. So that's the main thing to look out for here for the Bitcoin price. Now, this little comment here is same price, but crickets, peak Bitcoin euphoria. So we've been at these prices before with peak Bitcoin euphoria. The chart tells you all the news you need to know, and you can just look in one place, essentially like an RSS feed or something like that, right? So here we are, Bitcoin, same price, above 50%. This is all looking relatively okay, even if we see some further downside over the coming days or weeks, which in the last video, I looked at this particular signal here where Bitcoin weeks climbed 5 weeks or more, typically had shown a reversal. Now, something I failed to mention was the kind of the invalidation, but what can also happen from that point. And once they hit that 5 weeks, they can go on for a few more weeks over that 5 weeks. All that, we hit a new 5-week top only just by a few bucks on some exchanges. In this case, this one's here on Binance with USDT, and it had a much lower close on the week. It still is the second highest close in Bitcoin's history. So I think we've got a bit more time here to decide who's going to win, the bulls or the bears. The bulls are still in control while it's still above $65,000. So keep that in mind. Like and subscribe. I'll see you guys back at the next one.